The U.S. stock market took a breather on Thursday as investors digested big tech earnings and a fresh round of global trade news. The S&P 500 slipped about 0.4%, and the Nasdaq dropped 1% as investors rotated out of technology names. Meanwhile, the Dow Jones outperformed, rising around 280 points or 0.6%. The pressure came after mixed results from the tech giants. Alphabet surged nearly 5% thanks to strong ad revenue and cloud growth. But Meta sank about 12%, and Microsoft slipped around 2% as investors reacted to higher spending forecasts and cautious guidance. The selling didn't stop there. Even Nvidia shares retreated, signaling a short-term rotation away from high-flying AI stocks. On the flip side, bank stocks like JPMorgan and Bank of America saw gains, along with healthcare names such as Eli Lilly, which jumped 2% after raising its earnings outlook. Beyond earnings, traders watched the latest U.S. China developments. President Trump and President Xi wrapped up talks with a deal to cut fentanyl-related tariffs to 10%, lowering total Chinese import levies to 47%. In return, China will boost purchases of U.S. soybeans and delay new rare earth export restrictions by a year. However, key issues like Nvidia chip exports and the TikTok divestiture remain unresolved. Meanwhile, Federal Reserve Chair Jerome Powell signaled that another rate cut in December is not guaranteed, even after this week's quarter-point reduction. That cautious tone cooled market optimism, leaving investors on edge as earnings season and policy uncertainty collide. Stay tuned. Volatility may just be heating up,